Hey guys, what's going on? This is your boy Azam with Investofy, and in today's video, I'm going to go over a stock alert we sent to our subscribers in our private group. And the thing is that this stock alert was sent about 6 weeks ago, and today it has given us an insane 113% return on investment. And the crazy thing is that's not this end for the stock. We believe that this stock is only getting started. So there will be probably perhaps an opportunity for you to get into this stock. But not just that, you will also get a free stock alert today in this video, a stock that I plan to purchase tomorrow as well. So you guys get in first hand into that. And to do so, you need to have a brokerage. Well, that's why you should join Webull using our link below, because you'll get two stocks for the value of between $800 and $1,600. So don't miss on that extra cash that you can get and to start off with the brokerage. So let's get started with this stock alert that was sent on December 21st, 2020. And we sent it for API, and which is a tech company. And we told them, hey, buy the stock at the price of $43.84 or market, and put a stop loss of $35, because it's always important. Whatever business you're in, you should know if it goes against you, at what point should you get out. So we put a stop loss of $35. That gives us a difference between these two of $8.84. So that's essentially the risk per share that an investor would be making. And we said, hey, our aim is that this stock will hit probably $59. Personally, I felt that this stock has a lot more value and that it's going to be worth a lot more than 59. But I like to just think that something that is attainable and something that will give us a good return on investment, which was about 2 times the risk that we were making. If we were making an $84 risk per share, we're going to make possibly around $16. So that's a good return on the stock that we are planning to hold for months on end. With that being said, what's happened since then with the stock is, if we go right here and remove me out of the picture, if we go to stock charts, we can see that today the stock has reached and closed at 90.77. That is absolutely insane. And it's crazy. And the highest it went was 91.53. So it's given 113, more than 113% return since December 21st, when we first bought it at this point. And what made me buy this stock was I felt like that this stock had a lot of potential. It was near its good support level. And keep in mind that this stock did drop even more to up to 37. It came close to our stop loss before it shot right up to 90.77. And you need to understand the anatomy of such stocks. So let's get to it. There is a few things that this stock has going for it. And for instance, the few things is that they have pretty good gross margins. That matters to me, that they have sales, right? But then some of the interesting things about tech stocks that can happen is that you want to look at the float. Float is exactly the same thing, especially the shorts float tells you how many stocks are being shorted, and that tells you like 27% of the shares are being shorted. Like what we saw with the short squeeze with GameStop, this is quite similar to that. 26% is a pretty high number. So it gave me that opportunity that I was like, oh my God, I think there might be an opportunity here for us to invest in the stock for the long run. And if there's a short squeeze, this stock can do exceptionally well. But if it goes against us, we have our stop loss in place, and I think we'll do well. And as you can see, the stock just skyrocketed. There was this gap up, and it's given 113% return on investment for our subscribers. And that's what excites me, right? But there was also a reason why this happened. Sure, there was a short squeeze by any means, but there's also that they raised $250 million in cash, and it was coming from one of their three largest institutional shareholders. One of them is Dragoneer, the other is BlackRock and Capital World Investors. And the assumption is that probably BlackRock invested $250 million in that. And that's a good sign, because if they're investing in this stock at such an early stage, then they are anticipating that, hey, this stock is just getting started. We want a 5x, 10x return on investment for our money. And so they're going to be holding on to this stock for a long time because, again, it's only an $8 billion market cap. Majority of the tech companies would be hitting 20, 25, $30 billion, especially coming from China. So that's the opportunity here. Now, my intent is not to boast about what our subscribers did, what we achieved with this stock, because every now and then we fail as well. I fail, right? But I believe that there's a great stock that you guys can buy tomorrow, that I plan to buy tomorrow when the market opens, arguably after the first 30 minutes or so of the market. And that is Dropbox. Now, I think Dropbox is a great company. They have a lot of huge enterprise clients. And it's at that point, if you look at the weekly chart, it's had this uptrend and then it's pulled back. And now I think it's getting ready that I think perhaps by next week, it's going to break out and it's probably going to hit multi-year highs. And I think that this stock has potential to go up 20 to 50% easily in the short term. And I think it can even go up to $40 a share. So if you were to buy this stock tomorrow, I would urge that you would buy whatever the market price is around that time, but with a stop loss of about 21.5. And that's really it, guys. That's great stock and I highly recommend this. Go ahead and buy this tomorrow, or let me know what your thoughts are on this stock. So with that being said, once again, don't forget to get your free stocks from Webull. If you have any questions for me or any stocks that you want me to take a look at for you guys, let me know. I would love to check those out. If you have any comments about this video or your own thoughts about Dropbox, please let me know. Once again, thank you so much and have a great evening. Take care.